Good afternoon, and welcome to our Loan Officers and Borrowers Can Benefit from the SBA webinar. Please let me introduce to you the President of CAMP, Ms. Audrey Boissneau. Audrey?
Thank you so much, Megan, and thank you for all your hard work on all these webinars that we've been putting together. I just want to say thank you and good afternoon to everyone who's here. We really appreciate that you've joined us. Just a little heads up on what we have coming down the pike. We are working on a call to action to our legislators to help them understand the significance of the issue that's happening with Fannie and Freddie and the secondary market and servicing at the moment. So please keep your eyes peeled for that. It is definitely time for people to renew their membership if you weren't on auto renew. So please go to the CAMP website, thecampsite.org, and do that. It's very simple and quick. On Monday, we will have an industry update with Barry Habib at 11 a.m. So you'll see the flyer and the social media post going on out right after this webinar today. And he'll give us an update, and then they're going to do a little overview on their system. Dave Luna will be joining us on Tuesday morning at 11 a.m. And then at the end of next week, we're working on something so that landlords would have some idea about what they should be doing if they're with their tenants. So that's a little squirrely these days. In addition to that, there is a lot going on, not just at the national and state level, but at the local level with a lot of the cities and municipalities really putting together a bunch of extra rules and guidelines for their citizens. And so we're trying to keep a close eye on that so that we can help them understand what they are putting into action. So if you catch wind of something that's going on in your area, please feel free to let us know and we'll try to address it. So without further ado, we will start with Jason Bellevue and Michelle Otolia. They are going to guide us today. So what we're going to do to begin with is they have a presentation for us and they'll take us through that. But when you have questions, make sure you feed them into the chat bar. And then we will take your questions too. So, so go take it away, Jason.
Hi, my name is Jason Bellevue. Most of you can probably see me. Michelle Otolia and I have worked together for about 20 years. You can move to the next slide, by the way. What we're going to be talking about is a couple of different stuff, a couple of different things going on right now. Most of you heard of the SBA and the CARES Act. The CARES Act, with regard to what we're talking about, is going to be two aspects, the EIDL and the PPP. EIDL is the disaster relief program directly through the SBA. PPP is the payroll protection program. You can go on and move to the next slide. Go ahead and keep going. And yeah, my son's joke, he helped me do the presentation. I do hate photos of myself, but like it says, I've got the video up. I'm the president and CEO of RAF Investment Services. We were in Berkeley from 1984 to 2008. We're currently in Pinole. You know, we like to joke, if it's a business or a property, we can loan on it. We do construction, commercial, SBA, residential. I also do property management. I have a property management arm, real estate arm, and real estate development. Prior to this, and one of the reasons I got into this was I did software specifically for banks, and directly before taking over the company, worked for a division of PNC Bank where I was a director of product development. Next slide, please. This is kind of a brief overview about Michelle, but Michelle's been in SBA lending and business lending for over 40 years. He's been working with me for almost 20, and even in that time frame, he's gone out and been an SBA lender, vice president of a couple of the different nonprofits. Some SBA loans called 504s actually are two pieces, and the second piece is generally from a nonprofit. Michelle was the vice president of one of the nonprofits for a while. So let's get into the nuts and bolts a little bit. If you can move on to the next slide, please. Obviously, CARES Act stands for Coronavirus Aid, Relief, and Economic Security Act. Next slide, please. And we're going to specifically talk about the first program from our perspective, which is the EIDL, or Economic Injury Disaster Loan. Next slide, please. So the EIDL is the place we're recommending everybody we consult with starts. If you have clients that own businesses, this is also where you're going to want to direct landlords, is to the EIDL program. The EIDL is a low fixed rate loan. It is unheard of to do a 30-year fix, which is what this program is from the SBA. Their program's not usually that long of a loan. They are for small businesses, nonprofits. Landlords fall under a small business category. Obviously, you can see the funds can be used for fixed debts, payroll, accounts payable, and other bills. One of the things that these loans can be used for is if you have other loans out there that are higher interest rate, you can use the lower interest loans to pay them off. They have to be repaid. They're a 30-year fixed. And there is a collateral aspect to it, but that's actually changed a couple times over the last 3 weeks. And I'll talk about that a little bit more in the next slide. And you can move on to the next slide, please. As I say, not to just read from these things, but here's some of the things that are really the important highlights on it. Originally, when they first came out, they were saying that any loan over $25,000 was going to require collateral. They've increased that to $200,000, and the interesting aspect of it from most of our perspectives is they only will require collateral if you have it. So you can still get the loan even if you don't have the collateral. So a $200,000 loan, they are only going to try to secure it against something if you have equity in a home, for example, to secure a $200,000 loan against it. If you don't, they will not take the collateral. And it's from all of the information that we've been getting to this point, there's still some aspects of that are somewhat up in the air. As I said, it went from 25,000 to 200,000 in a week. So we're still not sure where that's going to end up. We also were originally told that you were going to need tax returns. A lot of documentation was required. And we have all of the loan applications and so forth that we believe will be required. But again, that's changed. Nobody is really sure what the SBA is going to require. They obviously, because it is an emergency relief fund or loan, they are going to or have eliminated the criteria that you have to provide proof that you can repay the loan. The last aspect of this, when you actually go in and apply for the loan, the last screen you get is for you to put in your bank account information and routing number. And it says within 3 days of your application being submitted, you're supposed to get a $10,000 advance. That $10,000 advance is supposed to be completely forgiven, was supposed to be a short-term, quick way for you to get some quick funds to help with small businesses that are in desperate need. Interestingly enough, on that $10,000, number one, we have put through a number of loans more than 3 days ago, and we have not seen the funds yet, nor have large groups. If you look on Facebook, there are a lot of people complaining right now about not seeing that money yet. The other thing I heard this morning on a webinar was that the Massachusetts SBA, somebody from the Massachusetts SBA had said that the 10,000, it wasn't guaranteed 10,000 for everybody, that it would be somewhat dependent on the number of employees. So I'm going to be honest, I don't know the answer to that right now. But what we do know is that supposedly there's supposed to be a $10,000 advance within 3 days of applying. We know we are not getting it in 3 days. And like I said, I'm just not sure about the $10,000. I hope you understand this stuff changes faster than we can keep up almost. When we get to the PPP program, it literally changed yesterday. So you can move to the next slide. As we said, The general formula is 6 months expenses. That would be the loan that they would provide to you from the SBA. Believe it or not, this one's up in the air as well now. If the loan's under 500,000, they're not going to take a 4506T. They actually might not be taking 4506Ts at all now, especially with the number of shutdowns with the SBA, or within the IRS, excuse me. With the number of shutdowns with the IRS offices, like the West Coast offices are all shut down. They're talking about just not doing the 4506s at all. So that one's still up in the air. As I discussed earlier a little bit, it's a 30-year fixed loan at 3.75%. If you're a nonprofit, it's 2.75%. I personally deal with a lot of nonprofits, so this is one of the things that we've been talking to our clients about, is that, you know, if you are a nonprofit, here's an example of, you know, one of the other programs you can apply for. And a lot of the nonprofits are being beat up pretty badly. I'm actually the vice president of a nonprofit, and we're applying for some of these programs as well. We're a business association, and obviously our businesses are in rough shape, which means our dues are in rough shape right now. Maximum loan is obviously $2 million, or is $2 million. All payments for the first 11 months are waived. You don't start paying till the 12th month after you receive the loan. This is another one of those interesting ones. Originally, we were told that it was based on a credit and that you had to have at least a 640 or better to be able to qualify for this loan. That's gone back and forth, and we have directly had SBA contacts we have say apply anyways, that you still may get approved. So it's one of those areas that's still up for conversation. So we've been telling our clients, whatever your credit is, go ahead and apply. Go ahead and move on to the next loan, our next slide. Obviously, does this work for landlords? It most definitely works for landlords. They can apply under this particular program. This program, as I said, also covers self-employed, or I think I said it covers self-employed, sole proprietors, corporations. There is a criteria that corporations under 500 employees, I thought was in here, I don't know where that slide went, but under 500 employees, it covers 501c3s, tribal businesses as well. I know of some 50c6s and some other nonprofits that I am told qualify under the other category. And then from the SBA's website, which we will have a link to, where you apply for this program, if people have questions, there is actually a link within the website where you apply to check and make sure you meet the SBA's criteria as a business. It's very easy to look up, and it's right on their website. And you can move on to the next slide. So I thought this was important to see because I've had clients who went through and were applying for the program and said, "Oh, I think I got my application through. Can you know, how do I know?" Well, this is how you know. If the application goes through for the disaster loan assistance program, you will actually get the application number and show that it was submitted, and it will tell you what email address that the email for the SBA will be sending the information to. That confirmation number is very important, though. And I'm not sure if you can tell, this application was put in on the 30th, and we have heard nothing at this point.
Actually, we do have some applications that were submitted March 25th, as soon as they opened the EIDL, and they still also have not had any news or any information back from the SBA yet.
And your clients, if you're talking to any clients who are thinking about doing this, or even if you're doing it yourself, this program's been out, what, 3 weeks now? Almost 4? And It's gone through 3 iterations. We applied, we're helping clients apply on the first round. It was then changed and said that we had to upload all the documentation, applications, about 7 or 8 documents they were requiring. They came back and said anybody who did that upload in the second round, where you uploaded all those documents, anybody who did the application in the first round, there's a new one and you have to go back and reapply. So the new one's only been around since about the 30th. And you had to go through and reapply if you had applied in the previous weeks.
And the new one is the one that is that makes available $10,000 within 3 days.
Supposedly.
Supposedly, yeah.
Okay, you can move on to the next slide. The Payroll Protection Program. This one's interesting, and you can go ahead and move on to the next slide. This is the one, as I was telling you, literally changed on Thursday. Right now, there is $349 billion for small business loans, or to support small business loans. We have a calculator that we'll be able to supply to you, but basically it's 2.5 times your average payroll, of max being $10 million. You are able to use payroll costs, employee salaries, health benefits, insurance premiums, mortgage interest accrued, and you just have to be able to prove that this was all occurring before February 15th. So you have to have been in business on February 15th, 2020 to be able to qualify for the PPP program. It's pretty much the same criteria as for the EIDL, small businesses. As of today, independent contractors and self-employed individuals can apply for this program. Now, this program is a little more unique in that it's not being done directly through the SBA. It's one of the core differences between the two. The EIDL is directly done through the SBA. They're funding it, they're doing the loans, they're doing everything. The PPP is being done through the banks. Now, the SBA is going to pay the banks back. I guess that's the way to look at it for the loans that are done. But I think it's why we're seeing so many issues with the PPP is the banks are being told it could take between 2 and 7 weeks to actually get their money back once they're doing their lending. So we're seeing the banks kind of putting their own criteria on this stuff because in their mind, they're on the hook for it. And technically they still are. You're not going to be paying the SBA directly on these loans when the note is due or even for the payments on any portion of it that you have to pay for. Now go ahead and go to the next slide.
I just want to add something here in terms of the PPP. Those are lenders that usually do SBA in normal times that are already equipped to transmit the information to the SBA through electronically. And those banks, those lenders, they lend directly and they are guaranteed the 100% of the debt by the SBA should there be a loss. So it's still a guarantee only on those PPPs for the lenders. And that's why there has been so many changes, because as the lenders were looking at the requirements, the SBA requirements a lot of times did not fit with the lenders' own underwriting guidelines. So that's where there have been some adjustment from week to week. And on the so it's 100% guarantee. Now the fee that the SBA wanted to give the lenders on those loans that they were disbursing was 5%. A lot of lenders initially said, well, we're not going to do those loans for 5%. We also have to service those loans. 5% does not cover the loan cost and the servicing. So that's where there has been a lot of changes between the largest banks and the administration, the SBA administration, that guarantees those loans in terms of, you know, it's a give and take. What can we do? Like Jason was saying, some lenders still wanted to have the credit, minimum credit score requirement, although the SBA said, no, we don't need this. So it's, you know, things are very fluid still. And are moving pretty much every day. There is a new regulation that is dropped or a new one that's coming up.
And you can go on and move to the next slide. A perfect example of that, of what Michelle is talking about, was when this program first opened up, we were told that as a business owner, in my case, that I could apply with my W-2 income, meaning anybody on payroll, as well as independent contractors. I have real estate as well. I have property management, so I have a number of independent contractors. I have LOs that are independent contractors technically. And what was interesting about that was that changed when Thursday. So the SBA put out a new document, questions and answers document on Thursday, where they said that anybody who is 1099 can apply for themselves on the program, but you do not include them as part of the payroll for the business anymore. So I can't include any of the 1099 employees in my payroll, which made sense to me. It didn't really make sense to me that I was supposed to include them, truthfully, especially knowing that the self-employed were going to be able to apply on their own as anybody, as it says, anybody who has a 1099, anybody who is considered unemployed. The key to this program, a couple of important things are, for example, you cannot be applying for unemployment and be applying for a PPP program. You cannot be the $10,000 from the EIDL program. Technically, it's supposed to be deducted from this program. So if you qualify for $20,000 on the PPP program and you already received the $10,000 grant from the EIDL, they are supposed to reduce that when you get the PPP program. As of yesterday, the PPP program had done about $110 billion in loans to that point. It was about 454,000 loans had been applied for. So it is a massive undertaking for these banks, and they're still trying to keep up with it, and they're still trying to get guidance from the SBA. These were supposed to take no more than 7 to 10 days to fund. In most cases, that was the whole objective, so that people could get short-term funds very quickly. The other thing to understand about this program is if 75% of the monies you use go towards payroll expenses, then the money is forgiven. Any money that isn't forgiven is a 2-year term at 1%. Again, here's another thing that changed. When it originally came out, it was supposed to be at 0.5%. Now it's at 1%. The other thing that should be helping this program a little bit is with the Federal Reserve making their announcement yesterday with what they're putting in to help buy bonds. I think we all heard about that. But one of the other things they're doing in that program is they are going to offer short-term loans to these banks at 0.5% or lower to allow the banks to do the PPP program and have a loan behind it. So it'll allow them to do it quicker and until the SBA then gets the guarantee back to them. So everybody's trying to find a way to help these banks advance these loans a little bit quicker. You can move on to the next slide. We talked about the loan forgiveness, it's 1%. The other important factor is that you cannot pay anybody more than, well, whatever the monthly would be, it has to be less than 100,000 a year. So, you do the calculation. No one person could get what would annualize as 100,000, more than $100,000. So that's the way this particular program works. Again, if you cut any employees, if you reduce the salaries, that will affect the amount that's forgiven. And as I said, the loan's due in 2 years. Go ahead and go to the next slide. For the PPP, you do not need to pledge collateral. There's no personal guarantee. The SBA, no, the SBA is waiving. Yeah, the SBA is not requiring you to look at other sources. And the program's good through June 30th. And you also, basically what they're giving you is a 2-month time frame to spend the money. So from the time you get the loan, it's intended to be for the next 2 months. Concept being is that's how long we will need the support. I think that could change. As I said, everything seems to be changing fairly quickly in these programs.
Now, in terms of the application for the PPP, you can apply to several places and several lenders at the same time because it's on a first come, first served basis, and some lenders go quicker than others and have different requirements. So that's why the number one institution where you need to start applying is your bank, where you have your operational accounts, and like Chase, Citibank, Wells Fargo. Wells Fargo is
Wells Fargo shut down in 75 minutes. They had $10 billion worth of loans applied for, and they stopped. So it depends on the lender too.
First, apply with your banking institution, and second, apply with these SBA lenders that have been working with the SBA for a very long time. They can process. They are used to process those kind of loans. And in those category, you have some nonprofit, you have some non-bank SBA lenders. So you have so a different group. So you cannot do double dipping. If you get the PPP on one with one institution, you cannot get the money from another one for the same expenses. So the philosophy here is that apply to as many places as you can right away, so that you'll have more chances to maybe get some money trickling down.
And we have an email we're sending out to the people we're working with that actually gives a list of SBA lenders that we work with, that we have talked to, who said that they will take non-clients. That's the other big thing on these. 90% of the banks out there will only work with an existing client. Exactly. There are far fewer who will work with non-existing clients. That, of course, became a huge issue for Wells Fargo clients, which we have now gotten a number of phone calls from SBA or from Wells Fargo clients who are looking for a way to get into the PPP programs.
And actually, we do have a slide with some of those institutions. There is a link there. So
and I think the download might even be here, the all you need to know, and if you don't have it, I'll make sure to get it to them so they can get it out to everybody.
Absolutely.
The other thing that's happening is the Senate had a $250 billion proposal. I think it was a billion. $250 billion proposal for additional funds into this program. Didn't make it out of the Senate. There's currently debates going between the Democrats and the Republicans. The Republicans wanted it to go out as it stood. The Democrats are asking for some of the funds to be directly allocated towards hospitals. So they're still working that, as far as I can tell at this point. From everything I heard today on some of the stuff some of the webinars and stuff I was on today, we're fully expecting that to go through next week. So there'll be an additional 250 put into this program, which, like I said, maybe that opens Wells Fargo back up, maybe that opens some of the other smaller ones, and that might even bring on a number of other lenders. Technically, there's about 117 lenders out there who are currently doing this program. The funny story, the SBA doesn't even know who's doing it, which I think is really interesting. They actually have put out a request for banks that are doing it to notify them that they are offering the PPP program. So very typical government. You can go on to the next slide. This is a calculator. It's an Excel spreadsheet that we will make sure to provide to CAMP to figure out what you can apply for in the PPP program. You can go on to the next slide. This was me applying. I applied through Bank of America, and honestly, I very well may not take the loan. I really don't need it, but I wanted to see the process and see how it worked. So once I applied, you should get some type of notification saying that your application has been received. This also, no matter who you're working with, like I said, we know our clients have gotten this type of thing from other lenders we've sent them to. And then the second email came a couple of days later. It says, okay, we've set up a portal for you to upload your documentation. Here's the documentation you'll need. Again, because the PPP is kind of driven by the banks, the documentation is different on every one. I have a client who had to upload the application, which again, that's something we can provide to Camp. We actually have the application for the PPP program, and she was required to upload the application, to upload her payroll data before she could actually submit the initial application. In B of A's case, they said, okay, go ahead and submit your initial online application. We're going to create a portal for you to upload your documentation. We'll send you a link when the time comes. Go in and upload it, and here's the stuff you're going to need to upload. Most of it around payroll, and at that time, believe it or not, even B of A wasn't sure about the 1099 employee stuff. I did this before the new guidance came out on Thursday. So they were asking me to upload all of my 1099 1099s for anybody I pay 1099s to. Like this changes. You can move on to the next slide. God, I'm saying and this is the actual look or the application you will go to for the EIDL program. They're apply for the PPP. Can't really see the link there, but for the EIDL program, we will provide a link to you, and this is what the screen will look like, and you'll walk all the way through the end and get that reference number at the end. There's about 15 questions they ask. You're going to need to know what your payroll is, what your income was for 2019, what your income is year to date, those type of questions which you'll fill out when you're submitting the application. At the end, you'll get a number. This is also the one where they're going to ask for your routing number and your account number, because you're supposed to get $10,000 within 3 days. You can move on to the next slide, please. There we go. I'm done. Questions?
Wow, that was a lot. I just want to start by saying thank you so much, because that was a lot. And guys, they put this together for us in the last 2 days, and they are not asking for anything from anyone. They're just doing this with an open heart so that everyone can benefit from it through this tough time. So very, very thankful, Jason and Michelle. Thank you for all of your efforts. I appreciate it. So let's start with, okay, so let's start. I want to get a little bit into the details about brokers and landlords and how they would apply. So just to recap, if somebody else is going to apply for these loans, then you can't as the broker. I got that. But what thing can they can include their rent, they can include payroll, they can include everything, right?
Correct.
I see you shaking your head. Okay.
Yeah, sorry about that. So, yeah, Michelle, you want to say?
Yeah, I was going to say mostly fixed costs. Things that are recurring every month, then like your rent is recurring every month. If you have insurance payments, they are recurring every month. So those type of payments can be included, like utilities, okay, water, PG&E. So all those things you can include.
Well, and again,
okay,
let's remember we got two different programs. The EIDL is much more expensive. You can pay, like I said, you can take a short-term high interest rate loan and pay it off with the EIDL. You cannot do that with the PPP. No. And the PPP, like I said, 75% has to go to payroll. Any amount above that 75%. So let's say you only use 50 towards payroll, then only 50 is forgiven. The other 50, you've got a 2-year loan at 1%.
Got it.
Two different programs.
Interesting. And then how about landlords? Like, how would they structure it? What would they be deducting? I mean, and does it matter whether their tenants are paying or not paying? Can they pay can they get missed rents from this? Can they pay their property managers? Can they deduct a portion of their mortgage and their whatever? Like, what can landlords deduct?
From a
And
land,
it's okay if I'm asking too many questions. Like if you don't know the answer, it's fine. But yeah,
I actually,
just tell me.
from a
Of
landlord,
course you do.
from a landlord perspective, I would stay away from the PPP because it really doesn't work for them. From a landlord perspective, though, I'd be looking at the EIDL. And again, the EIDL is much more expansive. So the EIDL is going to give them a short-term loan, 3.75 on a 30-year fix. And we're all LOs, but one of my clients was going, well, why do I want to do this? I said, well, I know you've got a 5-year loan right now that you're paying $1,777 on. And yeah, it's a great interest rate, but it's a 5-year note on 100,000, or she owes 88,000 at this point. So it's a 5-year note at $88,000. You're paying $1,770 for currently. I said, and the reality is, if we put it on this 30-year note from the EIDL, you're at $580 or $64. So that's the kind of stuff that it can work for, is those short-term notes. And yes, they're still going to have to show that they're being affected in some way. So if their rents have dropped, all those type of things, that's where they're affected. So they're going to show where their income dropped. And that's why they're going to ask for, okay, I need a P&L year to date. I need a P&L from 2019 if you don't have your tax returns. Show me where your income has dropped. And if they prove that, that money can be used to help pay their mortgages and those type of things.
Okay, so someone asked, do you have to personally guarantee the loan?
And again, that's the one that's very up in the air. As it stands right now, there is no personal guarantee, or there's no collateral under $200,000. The personal guarantee, the SBA is insuring them.
SBA always requires a personal guarantee. So,
Okay.
I'm a little wary of this one. In general, they require a personal guarantee. Now, the lenders that are doing the PPP may also want the personal guarantee from the borrowers, okay? Because they are the first one on the line. If somebody defaults on the loan, they are the first one. Then they need to go to the SBA to get the guarantee. And if they haven't done their work correctly, the SBA can deny that guarantee. So that's why the lenders are, they have been in between a rock and a hard place. They want to go quick and approve those loans very quickly, although those loans still have to be uploaded. And ultimately, the PP loans are still approved by the SBA service centers, like Sacramento. Here for California, all the Western region is Sacramento. So all the loans that are done by those banks, they still have to go transmitted to the SBA. SBA has to approve them.
So
Now,
if you're applying it, well, go ahead,
sorry,
Jason.
that's not completely true. There are delegated banks right now that do not have to get the approval. That was one of the issues that was happening. Believe it or not, Amazon helped them fix that issue with the Amazon technology. It's helped make the process a lot quicker. But there are particular lenders who have been delegated so they don't have to get the approval first.
That's correct.
The SBA has come out and said you don't have to get the approval first. You can do these loans ahead of time. There's number one. Number two, the EIDL says you don't have to have a personal guarantee. But I understand Michelle's take on things. He's been doing this 40. I've been dealing with the SBA primarily with him for the last 20. And, Michelle has legit reasons to question things because, of what he sees. However, they're saying that there is no personal guarantee. The PPP most definitely has a note you have to sign off on. The EIDL, there's still some question on whether it's going to be a non-recourse type of thing. Nobody's seen an actual note on one yet, so they don't know.
Right. And it sounds like you could have, like, if you're applying at different places, you could have different guidelines for each one and maybe have different requirements. So it's not going to be the same every place you apply, correct?
Again, define the two different loans. On the PPP, for sure. The EIDL should be exactly the same because it's the SBA, directly through them.
Yep.
But Michelle has a great point he could have made. We've talked to two different of our SBA guys that we deal with, that we do a lot of business with. One of them said you had to have a 680 credit score to be able to apply for the PPP. The other said you don't need a credit score at all, which is what the guidance is from the SBA. You don't have to have a credit score at all.
Okay. So be aware that you'll get conflicting information all over the place. Welcome to our world regularly, right? So you mentioned possibly having to have collateral for certain loans. I would like to understand, how would that work? I mean, are they doing appraisals? Do they have to go through a certain appraiser? How do they establish the value of the collateral if they're going to use it? Do you know?
Good question.
Thanks. That was my personal question, actually.
And I think that's why, like I said, it went from 25 to 200 in a couple of days. And I think that's part of the issue is they're trying to figure out how are they going to determine if collateral is required and what value they have. Right. In traditional circumstances. So I'll give you a traditional SBA loan. And obviously we're talking about this because, you know, Michelle and I do SBA loans every day, all day. I closed one on Monday. You know, we do a lot of SBA lending. And on traditional circumstances, what happens is they would get an appraisal of your property, and it might be your primary residence, and you're getting an SBA loan to buy a business or to expand your business. The one we did on Monday was tenant improvements of $250,000. In that case, that person doesn't have a residence. They're actually going to be living in the property that they have the business in, and they rent the property. So there was no collateral for the SBA to take. Traditionally, what they would do is get an appraisal of your property, which that's why I'm not sure how they're going to do this, because I don't think they can do the appraisal process. I don't think it'll work. Best case, they're going to do some type of desktop thing. And they would look at it, and only if you had greater than 80% equity and it was enough money to cover what you were being loaned against. They can't limit your loan because you don't have the equity. Exactly. Because the reality is they will loan to people who don't have any collateral.
Right. It just seems like such a conflict. So what? Yeah. But who am I to say, right?
Well, again,
okay. So
jump from 25 to 200 because that's the conflicts they were running into. You know, number one, how do we determine who we take collateral on? And number two, and more importantly, how do we determine what the collateral is worth?
Right.
Well, and that is additional collateral. The collateral that the SBA will take, no matter what, is a first UCC filing on the business. So they will take a uniform commercial code on the business they are lending to.
If they're lending to a business. But you have to remember, you can, under the EIDL, and again, Michelle, that's the traditional process. What I just read a couple days ago was they were not going to do the UCC filings on the EIDL right now because they will loan to independent contractors who really have no UCC they can file against. Okay. So again, that's one of those things where until somebody sees an actual approval from the SBA, it's still very much up in the air. I was on a call with the SBA, not this Tuesday, the Tuesday previous, and even they weren't sure how it was going to be done. At that time, they said, oh, you're going to need this and this and this documentation to upload. And then, or it was Tuesday before that. And the program changed literally. They didn't even know the program was changing the next Monday. That's when the new process went in.
Well, as we know, every day right now is like 20 years. So, you know, stay in tune, people. Okay, so somebody asked, how long of a timeline should we project in our need analysis? And I think you said 6 months. Is that right?
For the EIDL, it's 6 months. For the PPP, you don't really need to do a need analysis. They're going to take 2.5 times whatever your payroll is. And that's basically the number they're going to use.
Okay. And then somebody asked which lenders are doing this. Wells Fargo hasn't started. And you had said that you'll share a list with us of the lenders that are not your bank that they could go to.
Go to the next slide. I think we might even have an example of it there. Okay, try the next one.
No, it was about 3 slides ago.
It's okay, guys. Yeah. We can send out, if it's okay with you. We can send out.
Yeah,
we can send your slides to people. So we'll, guys, if you're listening to this and you want to reference this material, we'll get it out to you and anything else that Jason and Michelle think is important. Okay. Okay, so they're asking if the nonprofit is a branch of a larger entity, whose credit score would be used in the case of trying to get a loan for the local branch? Does that make sense to you?
Yeah, and it does. And there we go again. From a PPP perspective, there really isn't a credit score involved. For the EIDL, it's still up in the air whether they're going to use a credit score. For example, on the PPP, I applied for my PPP. they asked for my personal information. When our nonprofit applied for the PPP, that was with Mechanics, they asked for his information. But based on everything I've read, they're not going to pull a credit report on us, and there would be no point in pulling the credit report on the executive director for the nonprofit I'm the vice president of, because he's not the one getting the loan. So
okay.
It's again one of those confusing areas where I'm not exactly sure.
Okay. And just again, we keep reminding people that this is a very, very fluid situation and that they can keep changing this. So you have to really stay on top of it to know whether, you know, oh, I filed 3 weeks ago, I need to file again, that kind of thing. Okay, so somebody's asking, what if the borrower's business just launched this year and they have not filed business taxes yet? Are they eligible?
Yes, absolutely. What they will do is take whatever the income was from January 1st to February 15th. That's a great question.
Okay.
Believe it or not,
that is a great question.
Well, and that's
wow. And would they be required to document that at some point? Like, are they going to have to show bank statements at some point, or you're not sure, or they don't know?
They'll ask for some documentation, but that was, believe it or not, that was as a good question. That was one of the questions that was answered by the SBA in the latest guidance, because the banks were asking the same question.
Interesting.
That's why they answer very quickly.
Gotcha. Okay, so here, would a Gold Country Club 501c-7 qualify, and if so, under which program?
Again, it's one of those confusing areas. I have gotten two different types of communication from the stuff I've looked at and read, and from the answers I've got from others. If you look at the documentation, it says 501c3, 501c19, you know, it gives a number of different numbers. But I specifically asked about a 50C6 and was told that yes, it qualified. So my take right now is I would try, because even under the PPP program, there's an other category, which is where I would start, you know, is under the other category, and I would apply to both, truthfully. And that's what we recommend to everybody right now. Apply to both, you know, somewhat of a shotgun effect. One of the things that scares us is what last night Michelle was saying, had some statistics that they're expecting almost 70% of all restaurants to close due to this thing, and not
to be able to reopen. That's
holy guacamole.
The Restaurant Industry Association. They're saying that 70% of the restaurants that are will not reopen.
Wow.
And I know the business association I'm part of, we already know of at least 3 on one street that are saying they're not going to reopen.
That's heartbreaking. That is heartbreaking. So here we go. I have no employees or payroll. Can I apply?
Yep. They would apply for the self-employed program.
Yeah.
Okay. And
so
which one is that?
Whatever they made last year, whatever they've made year to date, they're going to be looking for P&Ls, banks, maybe bank statements, tax returns probably, but the portal should have opened up did open up for self-employed today. For sole proprietors, it was opened up on the 3rd. Corporations opened up on the 3rd. 1099 independent contractors, or again, if you might fall under a sole proprietor under a Schedule C in this case, and then the portal opened for you on the 3rd.
If you apply, sorry?
So unless you're Wells Fargo, and then it opened on the 3rd and closed on the 4th.
Right. If you applied on April 1st, should you reapply? If you applied on April 1st, should you reapply now?
For the EIDL, if you're talking the EIDL program, you don't have to. That should have been the new app. The PPP program didn't even open till the 3rd. So they've got to be talking about the EIDL, and provided they got that you know, the screenshot we had of that confirmation number, that's what they should have gotten if they were on the system. And like I said, mine was from the 30th that I showed there for one of my clients, so the 1st should have been fine. And they should have gotten that question. That's the big one. If you've got the question for the $10,000 for your bank account and routing number, then you're on the right system.
Exactly.
Okay. let's see. As an independent contractor LO, should we do both loans?
If you're being affected by it, absolutely.
Okay. And you know, like what kind of confirmation are they asking for with regard to showing that you've been impacted? So like how would an LO show that they've been impacted? Do you show your, I mean, you know, I would say that a lot of us have been impacted simply because our loans aren't closing as quickly. So, but maybe they didn't close last month, maybe they'll close this month, or do you take the loans you got approved and borrowers lost their job? Like, how do you do that? How do you prove all that?
And that's where it becomes interesting. I'm gonna let Michelle jump in afterwards.
Yeah.
The way I see it right now, they're gonna look at your last year's income, your year-to-date income, and that's how they're gonna qualify what you qualify for and if you qualify.
Right.
Interestingly enough, and one of the discussions on one of my webcasts this morning, because I do excuse me one second. Mira, quiet. I do a webcast in the morning right now. And one of the conversations was the amount of fraud that they were expecting, and especially in the PPP program. It's interesting. Apparently there are YouTube videos on how to go put through the fraudulent stuff on these programs.
Oh, geez Louise, what a shame.
They will at some point try to watch for it, especially with the PPP, because it's the banks. They're going to be a little more uptight about it, but based on what I've seen and based on the guidance I just read, they're going to ask for like 2019 year-to-date or 2019 profit loss if you haven't done your tax returns already, which most haven't, and they're going to look for year-to-date profit loss. May want to look at bank statements that show money coming in and out, but that's kind of where they're at.
Do you have anything to add to that, Michelle?
Yes, on the initial EIDL application, there was a form that was sent by the SBA that wanted 39 months of income. So just the sales, just the income. They wanted to see 2017, 18, and 19, and the first 2 months, January and February of 2020. And my feeling is that they're going to average the average income, monthly income, and then they will look at January, February, March of this year, and that it should be less than the average income, and that's what the difference. That's what they are going to cover. That's my take on it. That's the only way they can look at it. They look at history, how much was the monthly income, and they look at the last 3 months, how that income has dropped, and that's what they will do. They may revisit that in a few months, because I think this is going to be ongoing anyway. It's not going to stop as the months of March in terms of the numbers. We're still going to be seeing some decline in income for April, May, and most likely June before things starts picking up again. So. I think, and I've read somewhere that there will be possibility to reapply for more money in the coming months, depending on how much money the Treasury can send to the SBA.
So I was listening to something, and they were talking about the restaurant business, or any business, but they were specifically talking about restaurants. And just saying that once you shut down a business and you have to restart it, there's a significant cost to the restarting of the business. And do you know that there's any way to calculate or quantify that for these purposes? I mean, are you allowed to include whatever those startup costs would look like, et cetera?
I'm not aware of it.
Neither am I at this time.
Okay. And then finally, somebody's asking, does SBA work directly with loan brokers? And I don't know whether they're asking whether we as LOs could like jump on the wagon and start helping people with these, or whether there's, I imagine there's a process that you go through.
So it's twofold. Some SBA lenders require that you actually be a licensed broker. Some don't. But that's for traditional SBA loans. And if you don't know how to do them, you don't really want to play with them. I got to be honest with you. The one we just closed took what, 6 months, Michelle?
More than that, it was 9 months.
Okay. So when
You can have a baby, for God's sake, in that amount of time.
Yeah, exactly. And it was a hard delivery, I tell you.
and that can happen a lot, but there's some interesting things the SBA programs can do that you can't think of other ways. Mixed use properties where they move into the business. We can fund those under SBA and include improvements to the properties. So the SBA has some programs that are kind of unique, but again, you can't play. Now, I will say that the EIDL program is actually allowing for when your client puts through the application, there's actually a spot where you could say that, where they can say that we worked with somebody and there is a fee associated, and tell the SBA the fee. The SBA wants to know what the fee is, and they're going to pay attention to it. When we started, that was what we thought we were going to do for the EIDL program. What we came to the conclusion, Michelle and I, was we're just going to help people and do what we can, and hopefully they pay it back to us in the future. We've said to a couple of people, listen, if you could, when you get your money, if you're in a position to help us out for the time we put into it. Michelle's got 5 or 6 clients. He's probably put 15 or 20 hours a piece into putting their stuff into the system.
Oh my
and
goodness.
Going back and redoing the damn thing because
Initially it was a very arduous lesson. We had to learn the system, and then once we learned the first system, then they said no, all these applications, forget about it. Now here is the new link to the new application. You have to restart everything.
Holy smoke. So it sounds like it's just better if we just go find another realtor or another refinance to do and stick with what we are experts at. Yeah. Okay. So just what?
SBA
send them our way. But I just give them to Michelle, let him go do them.
Yeah, SBA programs are great because you can buy, an owner user can buy a property with 10% down, with a 25-year fully amortized loan. At one part of it, right now, the what is called the SBA debenture is a second that is funded directly by the SBA. The rate is at 2.95. So you have a 25-year loan at 2.95 to buy a property with 10% down. So this is, and on a purchase, the transactions go a little faster. They go faster. It'll take maybe 60 days to get it, to make it happen. 60 to 90 days. But the ones that take longer are the one for working capital, the one that have construction where you need to involve the contractor. So each loan is different. All the LOs know that, and but SBA has great programs, and they really help a lot of people.
And these programs will be the same when they get going. The problem, like I said, the most important thing to understand is, and like what we're doing, we now have, which again we'll give to you. We have just a standard email we send to say, hey, here's the places to go. When you need help, call us. And that's what you can do for your clients too, honestly. You can say, here's the standard stuff. This will start you. If you need help, I know people who can help you get through this.
Well, since I can only imagine what your hourly fee was for that transaction that took 9 months, I think I'll stick with what I'm already doing. So just to wrap up, you guys.
1 point on 250, 1 point on 250,000, so $2,500. That's what it was.
Okay, that was a labor of love. That was not an actual moneymaker, just so you know.
It was my girlfriend when we started.
I love Jason.
Okay, so finally, if there is one central, it sounds like you guys are all over the place in terms of you're getting information from everywhere. So if you are the person who's applying for these loans and you want to keep up to date on, do I need to reapply? What, where would they go? Is there any central place? Is there an SBA website? Or do they just have to, try to keep their ear to the ground and hope for the best? Okay, so this is what I'm going to ask of you since you've already been so generous. If there are substantial changes, that people should know about, why don't you let me know, and then we'll shoot something out to the people who were on this call. Would that be acceptable?
Absolutely.
Would you be willing to do that?
Absolutely.
Okay, that's wonderful. Again, thank you so much. We're at the end of our time. I cannot thank you enough for your time. I would just like to remind everyone to look for their information about Barry Habib at 11 o'clock on Monday, Dave Luna at 11 o'clock on Tuesday, and make sure that you are a camp member. Have a great day and a great week, everyone. Thank you so much to Megan. Good night. Goodbye.
Thank you.
Thank you so much, you guys.